Hello, everyone. Good afternoon. We have all gathered here on a webinar on the overview of the income tax bill. So today we have with us our pioneer, Dr. Girish Ahuja, sir. So it's a privilege for me to introduce sir because when we were kids, we used to study his books. So as a CA student, it's a dream to meet sir, to learn from sir, and I got the privilege because of Vishnu Agrawal sir to introduce Dr. Girish Ahuja sir. So let me introduce Dr. Girish Ahuja. Sir has done BCom and MCom from Shriram College, Delhi, by 1967. Sir has completed CA in 1970, and sir was the rank holder in the intermediate and the final examinations of the ICAI. Sir has done PhD from Faculty of Management Studies in 2009. Sir experience and employment not to be shared because he has done a lot. Everyone knows about it, but still, sir has joined Sri Ram College of University as a faculty in the commerce in 1970 and retired in 2011 after completing of 41 years of service. Sir is a practicing chartered mainly in the field of direct taxes. Everyone knows about it. Sir was nominated by the Government of India as the member of the task force for redrafting the Income Tax Act and new income tax law, and the report there was submitted to the Finance Minister in 2019. Sir was nominated by the Government of India as independent director to the Central Board of Directors of SBI for 2 terms.
There's some technical issue. You don't get voice.
And
are you facing the same problem, or is it with me only?
Sir, it's audible, I believe. It's audible. It's going proper.
Now it is, in between it goes,
Sir was nominated by the government with the approval of the Supreme Court to the Board of Directors of Unitech Limited. Sir was appointed as the independent director on the board of Ruchi Soya Industries Limited, one of the concerns of the Patanjali Group. Sir was appointed as independent director of other 3 listed company. He was a nominated member of the highly powered committee constituted by the Government of India under the chairmanship of Justice A.P. Shah, Chairman Law Commission, to look into the issues of applicability of MAT provisions. Sir has authored 25 books on direct taxation, both for the students and the professionals, including a concise commentary on the direct taxes, compendium of issues on income tax and wealth tax, direct taxes, ready reckoner, direct taxes, law and practice, guide to TDS, taxation of capital gains. Sir is consultant on tax matters to various industries and non-profit making organizations. Sir has delivered more than 3,800 lectures on various topics of income tax organized by the ICAI, ICSI, Chambers of Commerce, Management Institute, and various other organizations. Partner of Tax Law Educate Society, a non-profit making voluntary organization with the main objective to educate general public and professionals on taxation law and allied matter for the last 10 years. Sir is the president of SRCC Alumni Association for over 30 years. So, sir, we welcome you in this webinar and thank you for giving your precious time where you'll be guiding us on the latest income tax bill. So we welcome you and ask you to take up the session.
Before the,
please.
Just before that, I thought Girishji starts. I will just give an overview and I will show you. Yes.
The chairman is supposed to speak all this.
Right, sir.
Yes,
thank you very much, the honorable faculty Girish Ahuja ji. As we all know, we all call Guruji. My vice chairman, CA Vishnu Agrawal ji, moderator for the day, Aditi. Thank you very much for introducing Guruji. And it's a pleasure for me. It's my personal privilege, I would say, for this particular council year, which was started in 12th Feb 2025. Technically, we are doing this first webinar. And we have a speaker, none other than Girish Ahuja ji, on a very important topic overview of income tax bill 2025. And I know before we have started this webinar, we have already received a lot of questions, which I'm sure Aditya is aware of it. Just before Girish Ahuja Saab takes over and Vishnu Agarwalji, I would request him also. I would just like to brief you on income tax bill itself, what institute is doing. Just for the benefit of the members, this income tax bill was introduced on 13 Feb 2025, as you all know. But in fact, ICAI was engaged with the Department of Revenue as well as the CBDT from 18 September 2024, when the initial meeting happened with the Revenue Secretary, with all the stakeholders, where the ICAI was also invited. And they sought suggestions that what we should do, how should a comprehensive review of income tax bill should be taken up. And this was in idea with what Honorable Finance Minister announced in July 2024, that three important objectives of this new income tax bill would be to simplify the language, to reduce litigations, to remove obsolete sections, etc. So with this objective, meeting was called on 18 September. And thereafter, CBDT in first week of October 2024, in fact, invited general suggestions from the public also in regard to comprehensive review of the Income Tax Act. ICI, as usual, invited its comments from various members. A Google form was
I'm not
raised.
able to hear properly.
Uh, yes, sir. Is it audible now, Vishnuji? Am I
Yes, yes,
audible?
yes,
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 sir.
Yes,
yes,
sir. Yes.
Yes,
yes,
sir.
yes.
So, as institute got suggestions from various members across, we had introduced a Google form. All those suggestions were considered, and ultimately a comprehensive review of income tax, a memorandum was prepared and submitted to CBDT. And I would be glad to tell you, as a chairman of Direct Tax Committee, then also and continuing as a chairman of Direct Tax Committee, that a lot of suggestions were accepted, which included removing of around 113 obsolete sections, converting of provisos and explanations into clauses, certain simplification of languages. Obviously, once the bill was introduced, our president decided that we will form the groups and also again do a study and give our suggestions to the CBDT as well as select committee of Lok Sabha, to whom this bill has been referred. So continuing that action, a 40-member group was formed under the convenorship of seven groups were formed under the convenorship of seven different central council members who worked day and night, and we gave our preliminary suggestions first in line to the select committee of the Lok Sabha on 6th of March. Obviously, our suggestions were how far we can further reduce the sections, how we can consolidate certain sections. Maybe like just take an example for a penalty in the income tax bill. Still, there are 29 to 28 sections roughly, whether that can be consolidated into one single section or can be converted into a tabulation which has been done for the purpose of TDS. Similarly, whether the deeming provisions of 69A, B, C, corresponding clauses in the income tax bill can be consolidated into one particular section. So suggestions were given on a preliminary basis. Of course, those suggestions were not put on our website because detailed suggestions were not put, whatever were given in the slides, since it was to be kept confidential. But importantly, what I would like to tell you, in the select committee on the 6th March, when we were called for 2 hours, we gave our presentation for 10 minutes covering important suggestions, but there were question answer sessions, which instead of 1 hour 45 minutes, it continued for 2 hour 45 minutes. And we have tried to answer all those questions as well as on the clauses also. And there were also a lot of specific questions being asked by the members of the select committee of Lok Sabha. There were 31 MPs, and they asked a lot of questions on whether the definition of accountant, which our members are quite concerned under Section 288 to be continued, and what is the view of the institute. So after the meeting of the 6th March, we were been asked by the select committee to give the detailed comparison of the syllabus for deciding on 288 matter on the definition of the accountant and the corresponding clauses 513 in the income tax bill, which we submitted to them on 21st March. We have given the complete comparison of syllabus. We also gave a comparison of the position in USA and UK, wherein there are no other sister professional institutions in existence, in fact, and it's only a chartered accountants who are conducting audit. Thereafter, we were also been told that you kindly give us a clause by clause analysis and your suggestions in respect of income tax bill. So the 40-member group which was working on clause by clause, we tried to compile that. We also We also sought an information from various individual members through a Google form again. And we have compiled that information and running into a 4 volumes. And this was ultimately submitted to the select committee on 21st of April 2025. So it has been a great working. I would like to appraise the members about it. And obviously, as far as the institute stands, somebody would say, obviously, Girish Ahuja sir, when he starts to speak about it, I'm sure it would be further enlightening. But definitely, from an institute's perspective, we have been supporting this bill because it's an honest effort made by the government to simplify the law, to make it more concise. Obviously, one can argue that yes, a lot of more can be done in this particular bill. More could have been done, but for that purpose, I think so. They are taking the collaborative approach, cooperative approach. They are also seeking suggestion from various state bodies, and institute being one of them. Always we have given our views to it. I'm sure that would be considered. So this, I thought I'll just give a background on this. Apart from that, obviously, before I hand over my to vice chairman, but we had our meeting yesterday only of direct tax committee meetings, and 2 or 3 important agenda items have been cleared on guidance note on tax audit, on issuing of checklist on returns. I would request my vice chairman if he can throw some light on those also, which we were discussing yesterday. If Vishnu bhai, if you can throw some light,
Yes,
it would be
yes, yes,
quite
Chairman.
helpful for the members. So thank you very much once again, and my special thanks always to Girish Ahuja. So whatever this direct tax committee, जितने भी आपको thank you बोले वो कम ही होगा गिरीश जी. Thank you very much. You have been always there for us. Thank you. Thank you very much, Aditi, also for
So,
accepting the
so
moderation.
there was a mistake done by me. So I really need to introduce you. Listening you is a privilege again, sir. Definitely will be
No,
telling, but you have. So let me
no,
introduce.
Aditi, it's okay. We
Oh,
can go ahead now. That's okay because we have been interacting on this webinars quite a sum of time. So now I'll
Yeah.
directly request Vishnu Agarwal ji to continue it.
thank you,
Okay.
Vice. Thank you, Chairman Piyush Bhai. Very
Mm.
good afternoon, respected Sri Girish Ahuja ji, Chairman of the Direct Tax Committee, Piyush Chajed, Coordinator and the past Chairperson of the Bhavnagar branch, CA Aditi Agrawal, Secretary of the Committee, Priya Madam, Senior in the profession, ladies and gentlemen. I welcome all of you in the first webinar of the Direct Tax Committee, which are holding today. Friends, already my chairman of the Direct Tax Committee has highlighted on the Finance Bill 2025 what we have done before the select committee, and we have presented the close by close suggestion to the select committee. Friends, we at the direct tax committee are doing very hard work for the betterment of the profession and our members. Friends, yesterday we have done the direct tax committee meeting at our Delhi office, and we have formed we are forming some groups for our tax audit revised for the tax audit guidelines guidance note, and our checklist for the all the 7 forms of the ITR, form number 1 to 7. Friends, within 1 month or 1.5 months, we will come before you with the guidelines, revised guidance note on the tax audit 44AB and checklist for all 7 ITR forms. Friends, we are doing first time for the checklist for the all 7 forms of the ITR for the benefit of all the members, what requirement and how to fill up the better quality for all the ITR forms. Friends, now today we have with us Girish Ahuja ji, so I will not take much of the time because we all are eagerly waiting to hear Girish Ahuja ji on the Finance Bill 2025. All my 1,500 members are eagerly waiting to hear Girish Ahuja ji. So this is, friends, just I tell to you, this is the 4,287 lecture of Girish Ahuja ji on today's webinar. So I request everyone kindly join hand for the Girish Ahuja ji. Friends, once again, I welcome Girish Ahuja ji for accept our invitation for the benefit of all the members. Thank you, friends. Now I request Girish Ahuja ji to kindly take the charge, sir.
Good afternoon to everyone. Chairman of the Directors Committee, CA Piyush Chajed, very excellent person, I tell you, and he has been working very hard. Of course, we have the Vice Chairman also, CA Vishnu Agarwal ji, who has just, this time he won the, no, he'll be working very hard for this Central Council. Earlier he was doing for WIFC. So it is a nation now, sir. Now, coming to the Aditi, of course, who is moderating the program today, and we have two persons from Institute, CA Priya and CA Nabrata, ladies and gentlemen. Well, friend, let me tell you, if I remember, on 1st February 2024, the Honorable Finance Minister on the floor of the site said, we'll be coming out with Director's Code. That time she used the word Director's Code. I was really surprised why they are using the word Director's Code, which was there earlier in 2009. When it is directors, we have two types of taxes, but more than one tax. And at that time, wealth tax was also there. So Director's Code at that time was okay. So I went to the CBDT and checked out why this word directors. I can't go to the finance minister directly. Went to the CBDT and told them how this word Director's Code has come into picture. Then they realized the mistake. And next time, on 1st February 2025, the ma'am and the parliament said, we are coming out with income tax bill 2025. I was really relaxed. She did say Director's Bill 2025. Why I was really relaxed was that had there been a Director's Bill 2025, they could have brought inheritance tax also. They could have brought, because inheritance tax is also direct tax. So then I realized that there is only one tax which is going to come, and that is income tax. And this is finally already said by our chairman, came, and on 13th of February 2025, the income tax bill 2025. I remember we had given a new income tax bill way back in 2019. The task force worked very hard, and we had given them only, at that particular time. Now I will tell you, we had more than 600 sections in the Income Tax Act. People say it is 298. I'll come to that. We had given them 274 sections without any proviso or so. 274. But it never saw the light of the day. We were told at that time, it is informal meeting, that you have changed the law. We do not want to change the law completely. The reason is that all the judicial decisions, right from 1961 onwards, or maybe sometime 22 also, they will be changed. We'll have to see. They may not be applicable, those judicial decisions of ICAI, High Court or Supreme Court, because you have changed a lot of things in that. So the idea was not to change much of it. And then the idea was also there, who will train all these persons for the new bill. Now what have they done? I've already told you, if you look up the act, in Income Tax Act, it is written 298 section. But this is absolutely wrong. There are more than 600 sections in Income Tax Act. More than 600 sections in the Income Tax Act, if you believe me. Remember, we have section 22 to 27, house property, 28 to 44, business and profession, 45 to 55, capital gain, 56 to 59, other sources. If you had to bring any amendment or wanted to change anything in the business profession chapter, what were the possibility? So you could say 44 capital A, 44 double A, 44 AD, 44 A. Then you realize there is something missing. 44 ADA, 44 B, 44 BA, 44 triple B. Similarly, 35, 35A, 35 AB, 35 AC, 35 A. So these all capital letters are like 11A, 112, 112A, 115 capital A, 115 AB, 115 AC, 115 AD. What are these? These are subset sections. 115 B, 115 BA, 115 B double A, 115 BAB, 115 B double A, BAC, 115 BAD, 115 BAE, 115 BB, 115 BBA, 115 triple B, 115 BBC, 115 BBD, 115 BBE, BBF, BBG, BBA, BBI, BBJ. What are these? These are all sections. These are all sections there. So, what have they done? They said so much burden. They are more than 600 sections. And then also, there are so many sections which has no relevance now, like ATHH, ATHHA, ATHHB, ATHHC, ATHHD, ATHHE, ATHHF. They were all sections there. So what they have done now in the income tax bill, those sections which were not relevant have been done away with. ATHH. So many sections are there. About 70 sections or 75 sections they have taken away because they are of no significance. And secondly, whatever capital sections were there, they've been allotted a number now. They have been allotted a number. Earlier they were 44A, 44 AA, 44 AB, 40. So they have been allotted a number. Obviously, the number of sections now will go up. And that's why in income tax bill, there are now 536 sections. Don't worry about that. They were already there, more than that. Already there, 536 sections are now there. But earlier it was more than 536. What have they done? Whatever sections which were not relevant, which were irrelevant, which were lost in significance, they have been omitted. All sections which are relevant have been given number. Instead of having capital, have been given number. This is one. And now, earlier, the now schedules also to simplify the law. Whether it is simplified or not, that is the point discussion which we will do. But there are now 16 schedules and, of course, 536 sections. No section has now capital word. I was thinking the other way. I said, now you have given 28 to, earlier it was 28 to 44 BBD sections are there. Now it is 26 to 66. Now 7 to 220 to 20 given to house property. I will laugh. You want bill is passed. You want PhD, some amendment in the you want to add business or in the capital gain chapter or house property. Now they are watertight. Earlier also they were watertight. After. Now it is up to 66. They will introduce 66 VA. That will time. They have allotted to each capital. But 536. 536 section is very important. It is called as repeal and savings. Repeal is this Income Tax Act 1961 has been really repealed. But saving is what about the appeal pending? What about the assessment pending? What about the palliative, the default committed in the past? What about some 147, 148, whatever is, or the refund due, or the tax liability? For that, we always have a saving section. This is called 356, repealed and saving, which very clearly says any action which has been taken before 1st April 2026 shall stand there. All those provisions of the earlier law will be applicable for all activities relating to section, there. So there is nothing there. Every section which was there earlier, and if any procedure has been taken earlier, if assessment is pending, if appeal is pending, if there is some reassessment is pending or penalty is to be levied, all those actions which have been taken before 1st April 26, the old law will be there, and that's why the word is savings. And this is always there. When 9222 Act was replaced by 1961, there was also a section, repeal and saving. Here also there is a section called 536, repeal and saving. We are repealing the old law, but at the same time we are retaining the old law for all those actions which is there. Any action to be taken for any issue relating to the period prior to 1st April 2026. Now let me come to the the Income Tax Bill 2005. Let me tell you. There are 536 sections, but there is nothing to worry. They are same. The language has been simplified. Wherever the word notwithstanding was written irrespective of. Wherever the size of the section is too big, let's say the section is that section into we as we do in our books. They have done it in the same fashion, brought it down. Now, you have seen, Sir Piyush, you have seen TDS at a glance in already reckoned. TDS at a glance. You have seen TCS at a glance. Now, you will see the Income Tax Act only, the TDS at a glance. In the sense, now there is only one section allotted for Section 193, 194, 194A, 194B, 194B, 194C, 194D, 194DA. There is only one section allotted in 393. For salary, of course, 192 has been replaced by 392. But there is only one section. So one table prepared, and in that table, everything has been included. Whether a rate also included, and whether for resident or non-resident, everything is there as are be given ready regular. But don't worry, you will not be able to understand that. You will still have to go for ready regular because it is referred to as section 84, referred in section 355, referred to in section 544. How would you come to know that? They will refer this way. But there are TDS at a glance, section 394, TCS at a glance. It's at a glance, I would say, because only one section for TCS, only one section for TDS, except, of course, house business, salary. So I'll be coming to that. But what I'm trying to explain, whenever you read Income Tax Act 61 or 22, the first section is always says name, date of commencement, and extent. Here also it is said, Section 1, subsection 1. This act may be called Income Tax Act 1925. In the earlier section, this act may be called Income Tax Act 1961. That was also section 1.1, and this is also section 1.1. 1.2, it is applicable to whole of India. In the new law also it is applicable to whole of India. In the old law also it is applicable to whole of India. And subsection 3, 1 subsection 3, save as otherwise provided. Save as other provided, this act will be applicable from 1st April 2026. Save as otherwise means they may write that this section may be applicable from such and such day, from such and such assessment year. It is always written like that. In 1961 also, save as otherwise provided, this act will be applicable from 1st April 1962. Here, save as otherwise provided, this act will be applicable from 1st April 2026. So it is same. You remember there was section 2, which is definition. And we had a definition up to section 2, clause 48, which was zero coupon bond. Absolutely wrong. It's absolutely wrong. It was not 248. Why? We had 21A, we had 2223, 22 clause 23A, 223F, 223FE. You have so many. 229, 229A, 229B, 229C, 2 clause 29K, 2 clause 29B, 2 clause 29C. It is like that. So now they have been allotted separate section. So the section means clause. Here the section is only 2. They have been given separate clauses. So now there are 112 clauses in section 2. 112. 248 is now 112. 112 clauses. Like earlier, we started with 2.1 advanced tax. Now 2.1 is not advanced tax. 2 clause 1 is accountant definition. Then additional commissioner, additional. Earlier, advanced tax was 2.1. Now advanced tax is 2 clause 4. Earlier 2.1A was agricultural income. 2.1A agricultural income. Now section 2 clause 5 is agricultural. Earlier 2 clause 7 was SSC. Now section 2 clause 11 is SSC. Earlier 2 clause 14 was book of what is called block of asset. Now 2 clause 17 is block of asset. There is no assessment here now. So therefore, there is no clause 29. There is no assessment here. Earlier, you remember, capital asset was defined in section 2 clause 14, capital asset. Now the capital asset is defined in section 2 clause 22. Nothing to worry, same. Language may be simple but same. 2 clause 22. Earlier capital charitable purpose, section 2 clause 15. Now it is 2 clause 23. 2 clause 23. You remember most important dividend, section 2 clause 22. Now it is section 2 clause 40. 2 clause 40. We were at 222 at that particular time. Income definition. Ages we have been knowing. Income defined in section 2 clause 24. Now it is section 2 clause 49. What you call person. Section 2 clause 31 earlier. Now it is section 2 clause 77. 2 clause 77. Think of my case. Was there, remember all those sections. What will happen to me? My prestige at stake. Without taking a paper, how can they remember all these sections? Earlier I remember those, but now, because number has changed, how difficult will be for me. So you will pick up a book and find out. I don't pick up a book when I deliver a lecture. So what will happen to me? I really finding it difficult now. So 2 clause 48 is a zero coupon bond. Now it is 2 clause 112 zero coupon bond. I have to remember everything. 229A, earlier section was long-term capital asset. So section 29B, long-term capital gain. Now it is 2 clause 62, 2 clause 63. Earlier section was 2 clause 42A, short-term capital asset. 2 clause 42B, short-term capital gain. Now it is 2 clause 102, 2 clause 103. My dear, very difficult to remember, but now I will have to put in labor at this age also to remember all those sections. We had been doing it from right from 1962 when I started as by BCom, and from 62 to 2025, we remember all those sections now. Now the entire exercise has to be done not by me only, all of you, sir. You will have to remember all those sections which you 80C, 80CCC, 80D. Everybody knew that. 80E, 80. Now all numbers have changed. It's becoming a difficult proposition, but don't worry, the contents have not changed to the great extent. The section numbers have changed, and it will become. I still remember Companies Act 1956, and Companies Act 2013 has come. But still we remember old section of 1956. Now what will happen tomorrow? Once this fast, we will recall the old section and we will have put difficulties in knowing what is the section equivalent to that. Although in the site, in income tax site, they have given old section, new section, another new section, old section. But that is only the number which are there. Contents will be different. So now I'm coming to you, so many, and there may be certain definitions which were given at the end of some chapters. They have been brought before in section 2 also. They have been brought in section 2 also. They were given at the end of the chapter also. Now they are under section 2. Another problem which we see, but at the same time, now this is section 2. The most important change that previous year an assessment year is gone. We were always finding difficulty when we were depositing our tax. Sometimes we used to put previous year, sometimes assessment year, and mistake was commonly done. Now there is no question. And tax year has been given, defined in section 3. Previous year was also defined in section 3. Nothing new, but that was previous year. Now it is section 3 tax year. It has 2, subsection 1, subsection 2. Very simple, because what is important I will tell you, but what others is the overall view. What does it say? Simply language, see the language. Tax year is 12 months period. Is a 12 months period commencing on 1st April of the financial year. Okay, it's not that it is a period of 12 months, nothing like that. tax year is 12 months period commencing on 1st April of the financial year. And subsection 2, in case of a business or profession which is newly set up or a source of income which has newly come into existence, they used to say the period shall be the period starting from the date of commencement of business or profession is set up and the new source of come into existence and would end on 31st March next following. This was old. New law simplified, little simplified. I said subsection 2 of section 3. What he says, in case of a new business or profession which is newly set up, or a new source of income which has come into existence, new source of income has come to existence. The tax year will be the period starting from the period starting from A, because they have divided into two parts, starting from the date when the new business or profession is set up, or B, when new source of income had come into existence, and would end by the end of the financial year. Would be by the end of the financial year. Same thing, starting from the date of commencement of business, starting from the new source came into existence, earlier was would end on 31st March. Now it is would end by the end of the financial year. So language simplified, contents not changed, brought into two parts, A separate, B separate. Earlier, it was combined 5 lines. Now it is 2 lines, then 2 different lines, A, B, and then 5th line. So simplified. You will be able to understand properly. Otherwise, it was taking a long time to understand. This is section 3. No change in section 4. Only thing is, wherever the word previous year or was, you have the word tax year. Section 5. What was section 5 earlier? Scope of total. And section 5 says income in case of resident is income received in India, deemed to be received in India, accrue or rise in India, or deemed to accrue or rise in India, accrue or rise outside India. Then there was a proviso under that. Provided that in case of a not ordinary resident, income which accrue or rise outside India shall be taxable only when it is from a business which is controlled from India or a profession which is set up in India. And then there was section 5.2. In case of a non-resident, income will be deemed received in India, deemed to be received in India, accrue or rise in India, or deemed to accrue or rise. Now that proviso has been merged into 5.1. What says this? In case of a resident of India, the following income received in India or deemed to be received in India, income accrue or rise in India, or deemed to accrue or rise in India, income accrue or rise outside India. Next to that, however, in case of not ordinary resident, income which accrue or rise outside India shall be taken into account only when it is from a business controlled from India or profession set up in India. Proviso merged with the section 5.1. It's a proviso which has been merged, so that there is no proviso. Only thing is, it is merged there. 5.2 remains the same. Coming to now residential status. Section 6.1 used to give residential status of an individual. Now, no. Section 6.1 says residential status of a person will be determined in the following manner. So 6.1 allotted separately. Now 6.2 is for resident in India. And what does it say? Earlier it used to say 6.1 is a person, an individual is said to be resident in India if he has been in India for a period amounting to all 182 days in the previous year. Or in the 4 preceding previous year, he has been in India for a period amounting to all 365 days or more, and in the relevant previous year, 60 days or more. Very difficult thing. Now they have simplified it. An individual is said to be resident in India if he has been in India for a total period of 182 days in the tax year. Total period of 182 days, not a period amounting to all 182 days. Instead, is total period of 182. Simplified. Or second case, in the 4 preceding previous year, he has been in India for a cumulative period of 365 days. Not period amounting to all, aggregating to all, the total cumulative period of 365 days. And in the relevant tax year, 60 days or more. So language is changed, simplified. Otherwise, basic concept is same. 182 days or more, 365 in the 4 and 50. Previous year what the no taxi. 365 in the 4 preceding taxi. That is all. So this is what is section 6.2. Earlier, section 6.2 used to be meaning of firm, etc. No, now under section 6.1, there used to be explanation 1. In case of a citizen of India who leaves India for employment abroad, the period of 60 days shall be substituted by 182 days. ऐसे ही होता था. And in case of a person of an Indian ship who sails along with the ship, the period of 60 days shall be substituted by 182. Now simplified. How it is simplified? In case of a citizen of India who leaves India, first as a member of the crew of the Indian ship, or to be for employment outside India, for the purpose of employment, for employment outside India. The second condition will not be applicable. Condition 2B or the be substituted by 182 days. This all was too big a thing. Now I said clause B. We used to write in the books also. Second condition is not applicable. Means that condition of 365 days and 60 days, what is the need? It is 182 days. There is only one. A condition number 1 will be satisfied if it is for 182 days. So they are very clearly written that in case explanation 1 is not explanation 1 now. It is section 6 subsection 3. In case of a citizen of India who leaves India in any tax year for as a member of a crew of the Indian ship, or he leaves India for employment outside India, the next is the condition 6.2b above shall not be applicable. So sounds simple, sounds easy. You don't have to remember all that. Will be substituted by 182 days. Too much for the thing. Now next is, then there used to be third thing. Second explanation. In case of a citizen of India or a person of Indian origin who is outside India, who makes a visit to India, the period of 60 days in the condition number 2 shall be substituted by 182 days. Remember, shall be substituted. If he has been in India, his total income in India is more than 15 lakh, then the period of 60 days will be substituted by 120 days. Remember, that was the condition number 2. Now it is section 6, subsection 4. In case of, and then meaning of person and region as defined in section 115 such and such. Here it is given there. So what has it? In case of a citizen of India or a person of an Indian origin who makes a visit to India, the second condition will not be applicable if his total income total income in India, excluding income from foreign source, does not exceed 15 lakh. Second condition not applicable. So you don't have to bother about the second condition. Why same 182 days? But why write that? 2D, 6.2b will not be applicable if you come to India for a visit or you're a person of Indian origin and your total income here is less than exclusive of income from foreign source, less than 15 lakh. Second condition not applicable. Then third, 6.5. In case of a citizen of India or person of Indian origin whose total income is more than 15 lakh, the second condition of 60 days will be substituted by 120 days. Are you getting my point? It has become simple to understand. It is rather easy language. Otherwise, the things have not changed altogether. Basic concept is same. Only language difference. Earlier it was British language. Now it is Indian English. There is British English, now Indian English. That is the only difference, and become simplified to a great extent. Simplified to a great extent. Then there is used 6.1 resident if he is not liable to pay tax outside India, and he will be treated as deemed resident if his total income is from Indians total income exclusive of income of foreign source exceeds 15 lakh. The same is there now 6.8. Now earlier 6.9 6.2 was HUF firm. Now it is 6.9. Control and management is wholly or partially situated in India. Earlier 6.3 was India company. residential state of a company. What was the result? A company is said to be resident in India if it is an Indian company or the place of its effective management is situated in India. Here it is the same thing. 6 line. A company is said to be resident in India if it is an Indian company or place of active management is there. And then place of active management was given earlier in the what you call explanation. Now it is given in subsection. That was given in explanation. Now it is given in subsection. So my point is there is nothing to worry. Only thing is trying to simplify. And sometimes when you simplify, the length may go up, or sometimes when you simplify, they cut short many things. So section 6 has been simplified to a great extent. But the basic concept of 182 days, 60 days, 120 days, or 15 lakh remains the same. There is no change in this. This is what is called section 6. Earlier also section 7 was deemed to be received in India. Also now section 7 is deemed to be received in India. Earlier section 9B was a separate section, 9B. Remember, that is 40 in case of dissolution or reconstitution of a specified entity. It was treated as a deemed transfer in the hands of the specified entity. And it was dissolution, maybe of a firm, maybe of AOP, or reconstitution of AOP or BFI. We used to call it a specified entity. 9B was introduced in 2021. And along with that, 45.4 was also introduced, if you remember. Now that 9B section is 9, now it is 8, section 8. So section 8 is very simplified. It is same thing which is 9B. Language may be little simplified, but it is same. 9B is section 8. 9 section deemed to accrue or rise outside India. Remember, now 9 is also same. Language simplified, some which were irrelevant, deleted, but otherwise same 9 deemed to accrue or rise in India from a business correction in India, transfer of a capital asset situated in India, all those sections, or any capital gain arising from India, all that is there in 9. And there is one 9A fund. That 9A is now part of section 9. But the word business connection, which was there, now has been given in Schedule 1 of the Income Tax Bill 2025. What is business connection for this purpose? The 2 pages given in section 9, in Schedule 1 of the Income Tax Bill 2025. They are taken there. Next section, 10. Wait a minute. There used to be a section 5A, community of person of Portuguese of community of person, where salary was divided 50-50, other income, there is a combined tax on that. That section has become 5A, has become 10. We were not interested, it's only Goa people, those who are in Goa. And when I used to go to the Goa, they used to ask me, what is this? And now, other places, it has no relevancy. And that's why that section 5A is now section 10. And what was earlier section 10? Income which do not form part of total income. And remember how many incomes were there? How many incomes were there? 10, 10-1, 10-2, 10-2A, 10-3, 10-4, 10-5, 10-6. So many incomes. 8, 8A, 8B. There used to be 10, 10A, 10AA, 10B, 10C. So many incomes. And it was up to 1050. So much complicated in the beginning. They have not done anything. They have put all the exemptions, shifted from section 11. It is now 11. From here to Schedule 2, Schedule 3, Schedule 4, Schedule 5, Schedule 6, and Schedule 7 given at the end. 2 to 7 given at the end. Schedule 2, income which do not form part of total income. Schedule 3, income which is not part of an eligible person. Schedule 4, for a non-resident or foreign company. Schedule 5. So they have given it in schedules. They have removed from section 10. It is now section 11. Section 11 says, section 11.1. Income, the income which are specified in Schedule 2 to Schedule 6 shall be exempt. And subsection 2 says, if those conditions mentioned are not satisfied, it will become taxable in the tax year in which it is not satisfied. Similarly, for Schedule 7, 11.2, Schedule 7, same thing. Now, Section 10 is not there. Section 11 is only for 9 lines. All those exemptions which were there have been shifted to Schedule 2 to 7, not for salary. I'll tell you that. Schedule 2 to Schedule 7. Now you have to refer. So front is very light, the back has become very heavy. 2 to 7 is very, very heavy. Read those. Everything is given there. They say if you want to read it. Otherwise, this is like this. So 11, 10 has become 11. 11 is only few lines giving tutor, and everything of the exemption which were there have been put under Schedule 2, Schedule 3, Schedule 4, Schedule 5, Schedule 6, Schedule 7. Regiment, certain institution, Schedule 7, Schedule 6. There's so many things. If you read, you will be able to understand. They have regrouped them. It's good. Regrouping has been done. In case of resident, in case of non-resident, in case of certain persons, in case of all. So the regrouping has been done under Schedule 2 to Schedule 7. I'm supposed to give you the overall view, macro view. So this is the macro view which I'm talking to you. Don't think that I'll keep on talking to you Schedule 2, Schedule 3, Schedule 4, Schedule 5, Schedule 7. Okay, we're done. Coming to that. Now, there used to be Section 13A, 13B, 11, 12, 13. I come to first 11, 12, 13 charitable trusts. Remember? Now they've been shifted to Section 336 to Section 332 to 354. Section 332 to 354 is for charitable trust. Everything is included. Why they have done it grouped in one place? You used to talk about 11, 12, 13. Then you talked about 115 BBC. You used to talk about 115 BBJ, 160, 115 TD. Remember those? All have been put in one place. 332 to 354. You have to refer to the various sections for charitable trust. For now, only 332 to 354, you can read everything there. And let me tell you, most important, Priyaji, there used to be 11.1A, capital K. Capital K. That if you transfer any capital asset and there is a gain on the sale of the asset, you invest in the other asset and you were given the exemption. And there was an instruction where we say you could deposit in FDR for 6 months. It was absolutely wrong. And that's why 11.1A is gone. No 11.1A now. If you sell anything and you want capital gain, you will have to apply that in the previous year or can accumulate for a period of 5 years. But there is no question of buying another asset. You have to apply it. You have to apply. Now this has become part of 11.1, that is 330, but not the 11.1 is separately as capital gain. Gone. It's absolutely gone. Those who want to take a benefit of 11.1A, they have still time up to 31st March 2026. Don't think you will get a benefit of 11.1A after that. Be careful about that. Nobody has realized that 11.1A is not there. Be equivalent to 11. I should not say 11.1A. Equivalent to 11.1A is not there. Equivalent to 11.1A is not there. So please be careful about that. 11.1A practically is gone. Coming back. So I'm coming to now charitable, remember political party 13A, electoral trust 13B. Now both have been merged, Section 12. Now Section 12 talks about political parties and what you call electoral trust. Now there are certain conditions for this, electoral trust and all that. Those conditions have been put in for the Schedule 8. Go and see the conditions, not here in 12 section. Conditions are at the end. Read that. That may be at the end. Like for us or for you also, when you write books for your institute, you will have to bring those conditions in the beginning only, in the under 12. How can you say, please refer to that chapter? That is possible in Income Tax Act. They can do whatever they like. But for us, you have to bring it in the Section 12 and you have to give the condition as mentioned in Schedule 8. So it is not going to be an easy thing. Let me tell you, to write a book again is a very huge task. Herculean task will be. And मैं अपने बारे में सोचता हूँ. I think about me. How will I do at this age of 79, and you expect me to work? I already work so much. Now 365 days I'm working, and you want me to write a new bill or new act. Thanks to madam. Thanks to madam. We will certainly do it. We are chartered accountants. We have worked hard in passing the examination. So we are not bothered about anything. We will do it. And we have done about GST also. So what is this? We will be able to do that. Don't worry, ma'am. We will be able to do everything. It may take time, but it is going to be a good law for us and good challenges for us, because these days, even our clients remember the sections. Even clients knew all these sections because they have been listening to from me again and again section. They also know. Now, at least they will come to us and ask us what kind of a new section is that. Earlier they were not asked, oh, ATC, I've taken ATD, I've taken this, I have taken 153. You know more than what I know. उनको पता लग गया था, because they have been regularly doing it. Now, they will not study. We will study and we will make them understand. And by the time we make it understand, there may be many changes thereafter. So what I'm trying to explain, the exemption. Now, earlier section 14, heads of income. Remember, 5 heads of income. Now it is section 13, heads of income. Same 5 heads, but number 13, not 14. Earlier 14A, income which is expenditure incurred in relation to income which is exempt. That 14A is now 14. No change, 14 now. That is the only change. Now come to salary chapter. Earlier there were 3 sections, 15, 16, 17. Remember, everyone know. From 1962 till 2025, we all know there are only 3 sections in 15, 16, 17. But from 1st April 26, we will have to remember there are section 15, there is 16, 17, 18, and 19. 5 sections now. What has happened? 50 numbers remains the same. Charge of salary. Same, no change. 50. Salary is taxable due basis, receipt or basis, whichever is earlier. And arrears of salary will also be taxable in which arrears salary not paid. Same way, 50. But earlier 16 was standard deduction and employment tax deductions. Forget now 16. From ages we remember section 16. From ages we remember standard deduction and section 16. Forget now. From 1st April 26, it is not section 16. Now section 16 is meaning of salary. Earlier section 17 was 17 subsection 1 was meaning of salary. 17 subsection 2 was meaning of purpose. 17.3 was meaning of property in lieu of salary. Now section 16 is meaning of salary. Section 17 is meaning of purpose. Section 18 is meaning of property in lieu of salary. And section 19 is deductions from salary. From ages we have been doing deduction from salary are only 3, rather 2. Entertainment was 2. One was tax on employment and it was standard deduction. Now look here. If you are receiving gratuity, you have to add gratuity to full gratuity, gross gratuity received in the meaning of salary. And after that you claim deduction under section D. You have got leave encashment. The total amount of leave encashment received by will be taken into gross salary. And then you will be allowed deduction under section 19 of leave encashment. Now you have commuted pension. Earlier you were allowed, computed pension was exempt up to a certain limit, balance taxable. Now whatever commuted pension you receive will be included in your gross salary, then you will be allowing deduction under section 19. Voluntary retirement. Whatever you were getting, it was exempted. Now you will have to do it under 19. So many deductions which were allowed under section 10, section 10.10, section 10A, section 10E, 10, all have been brought to gross salary and then deductions under section 90. Section under section 90. Earlier, there used to be section 18, 19, 20, 21, long back, interest on securities, which was abolished. Now up to 19 is salary. Now because 2021 is in between there, and we don't have now interest on security, now house property chapter will start from section 20 to 25. And it was section 22 to 27. Now 20 to 25. 20 to 25. What is 20? Income from house property. Earlier it was section 22, income from house property. Earlier section 20 determine annual value. Now section 21 is how to determine annual value. Earlier section 24 was deduction. Now deductions are under section 23. Earlier 25 was a certain thing. Now 24 is arrears of salary. Sorry, 23 arrears of salary and what you call recovery of. 26 was property owned by co-owners. Now section 24 is property owned by co-owner. Same thing, section property owned by the co-owner, other section 26 property owned by the co-owner. And then section 27 was meaning of owner, deemed owner, etc. Now section 25, interpretation. All those are in the interpretation given in section 25. Have you noticed? No major change. But remember, whatever amendment was brought in Finance Bill 2025, these are earlier, they have been brought in income tax bill also. Same, like that you could not occupy the property for any because you could not occupy it, or you could not occupy for the reason you were employed elsewhere or carrying on a profession elsewhere, which was changed to for any reason you could not occupy. So same is there now. Whatever amendment were brought in Finance Bill 2025, they are there. But wait, whatever government amendment were brought in at the time of passing the Finance Bill, they are not their income tax bill. Because those amendment came after 13th February. How could they incorporate it? They will be doing it. They will be doing whatever amendment was brought in section, that is government amendments at the time of passing the bill, they will all be incorporated in income tax bill 2025. Because at that time, they did not know what kind of amendment are going to be there. A lot of amendment is for such cases. 115BA, 115BB, 115BC, all the amendments. But those will be incorporated in the income tax bill now, because at that time, those amendments were not there. So this is what you call section 25. Now, earlier 28 to 44 BD was for business and profession. It is the same that you introduced for electronic industry. Now it is section 26 to 66. Gone are the days. I'm really surprised. हमें ये याद रहता था 44A is 44AA is 62 maintenance of accounts, 44AB tax audit. Now gone are 44AB or 44AA. Now it will be section 62 for maintenance of account, section 60 for tax audit. 43B, we all remember 43B for ages. Now it is section 37. 43B is now section 37. Let me tell you, 37 is the section. That section 40, which are expensive, not allowed. 40 capital A, that 10,000 A, that now those sections are 60, what you call 56 and 57. Old section 40 is now 56, 43 is 50. For ADA, what for ADA, everyone knows what for ADA. Only one section, 58 section. Section 8 is item which second item which was E. Profession 58. Now you have all the three in one go. 58 section and then 59 conditions are there. So sections have changed. The contents more or less are same, but sections have changed. Now you have to remember 58. Now everyone knows from the bottom to right, even the client knows 44 AD. The client knows 44 AE. Now it will be 58 section. Number of the section has changed. More or less same. वही 8%, 6%, 50%, वही 3 crore, 2 crore, वो same are there. I'm trying to explain you, all sections have changed. But otherwise, there is not a major change in section 28 to 44 BBD. They're not major change. Next was 45 to 55A. Now it is 67 to 93 section. 67 is now 45. 68 is 46. 69 is 46A. 70 is 47. 70A is 48. 39 is computation 48. All those sections, even 54 is there, 54B is there, 54D is there, 54EC is there, 54F is there, 54G is there. But numbers have changed. Contents not changed. Numbers have changed. So you have to now relook the sections. Otherwise, not many changes. Same, but now 67 to 53 for capital gain. And 93. Next was 94, 95, 96, 97 income from other sources, which was 56, 57, 58, 59. Now there's that. Then clubbing of income. You can say 61, 62, 63, 64, and 65. Now there will be 96, 97, 98, 99, 100. Now read. 68 section is now 102. The name of the 68 section earlier was unexplained cash credit. Sorry, cash credit. Now it is unexplained credit. 68 is now 102. 69, investment not fully disclosed, is now 103. 69A, 69B merged into one, unexplained asset, 104. 69C, 105. 69C, 107, 69D, 107 is the other, that you will be liable to pay tax under 195. 115 BBE is now section 195. Now 195, that BBE, section 195. Then comes 100 setup and carry forward losses. Earlier section and setup and carry forward given in section 70 to 79. Now it is 108 to 121. 108 to 121 is what? Setup and carry forward losses. Same, but section change more or less points are there. 122. Earlier section 80, now it is 22. 80C, 123. Now 80C, 123. Remember that there used to be 80C, 80CCC, 80CCD, 80E, that total deduction under 80C, 80CCC, 80CCD cannot exceed 150. Now what have they done? Employees' contribution to pension fund, now it is gone under 80C. Not now in under 80CCD. Employer contribution remains under 80CCD. Employee contribution goes to 80CCA, that also goes to 80C. And you know, there is a long list of investment in 80C. Remember? Very big. 2-3 pages. This is very heavy. So that heavy has been put in Schedule 15. Go to Schedule 15 to know what kind of an investment under 80C. All have been put under Schedule 15. This is what is 80C has become very light. Very light is written that all investment are verified, can be seen under Schedule 15. So 80CCD is there, that is 102, all sections. Now 80TTA, 80TTB, which was 180TT, now it is 154. Merged 153. 80U is 154. So they merged 80TTA for senior citizen, for others. 80TTA, 80TTB, 10,000, 10,000, 50,000. Instead of separate section, they have only one section, 80TT, 153, TTA and TTB together there. Next section. Remember 87A. Now 87A is now 156. Ages we remember 87A. Everybody knows 87A, 12 lakh, 12 lakh. Now it is 156. 86 section is 155. 89 section is 159. This is the way they have done. And after that 90 section or 1990A, 91, they've been given separate number. Then the special provision regarding transfer pricing and that separate number. Then GAR, separate numbers. They will give you call. Remember from ages 139 return of income, 139A PAN number, 140 We remember for ages, 139B, tax return preparer, 140 self-assessment, 148, 140 verification, 148 self-assessment, 140B, tax updated return, 143.1, self 143.2, notice, 143. Gone are the days. Now, 139 is 263. And 263, other was very dangerous. Remember, 260 completion if there is an interest of the revenue and it is erroneous. Now it is return of income is 263. Return of income is 263 and 262 is 139A PAN number and Aadhaar number. So that is 262. 260 is the return of income. 264 tax return preparer. 139B. So that is 264. 265 is 140. That is return by whom to be signed. 266 is self-assessment tax. 267 updated. Number changed. Things are same, but numbers have changed. Income escaping assessment and shifted to 279 section. So my point is, the whole life, we know 147, we know 140, we know 144. Now 144 is 268. So you have to remember the new section. But let me tell you, there is no change except simplified in those sections. Language may have been simplified. But proviso have been merged in the section by making subsections, something like that. But let me tell you, this is 269. 260. I'm talking about the return of income. You think of TDS. Earlier there used to be 192, 193, 194, 194A, 194B, 194BB, 194C, 194D, 194DA, 194E, 194EE, 194G, 194H, 194I, 194IA, 194IB. And their section. Don't do that. Only one section for salary and accumulated, what you call provident fund. That is 392. Salary is earlier 192. Now 392 for salary as well as for provident fund. And 393 is complete for TDS. Entire, those gone, 193, 194, 194A, 194 LA, 194 LV, LVA, LVB, LC, LD. Remember? Now you don't have to remember that all. It is simple one, section 393, having a big table giving the serial number and the day and the amount of TDS to be deducted. This is all there. This is all there in that. One is very clear. And then next is for compliances, for certificates. 394 is for certificate to be issued. 394 compliances, all grouped there. Simplified, but a new thing for us, which will take time to grasp all this thing. We may find it simple once we are able to pick up everything. Otherwise, we are used to something which may be very difficult. But at the same time, we now remember those difficult things. I said, sir, why are you changing this? They said, we don't want to change any law. We want to keep the law as it is. Rather, 1032 minor income club, how much exemption? 1500. Still it is 1500. Still it is 1500. Still it is 1500 rupees. You try to understand, they have not changed anything. Same thing has been kept. हमारा वो जमाने में होता था, remember ये भी change आया था, salary chapter. Specified employee, one who is the director of the company, substantial interest of the company, whose total income under the head salary does not exclusive of non-monetary purposes, does not exceed 50,000. 1962, when I was reading, it was like that. When you were doing CA, it was like that. When the news students are reading, they are also reading 50,000. What is this? 50,000 rupees in a year. And will you give car to a person who has got a 50,000 rupees in a year? Free motor car, free gas. So what is this? Now they have written, as the board may specify from time to time. Remember our time, your time, children education allowance is exempt 100 rupees per month per child for a maximum of 2 children. My time 62 it was that, 70 it was that, 80 it was that, 90 it was that, 2000 it was that. 2024 it is 100 rupees per month per child. Are a copy nahi aati 50 rupees, so you can't buy one copy also. And he said 50 rupees. What a big amount of 50 rupees exemption you are getting per month per child. And there used to be exams, a question in the exam. He has been given 100 rupees per month for 3 children. How much is exempt? And Priya was also writing the study material, the illustration. How much will be exempt? Will it be written 50 rupees, 100 rupees, or will it be 33, 66 for 3 children? Or hostel expenditure allowance, rupees 300 per month per child for a maximum of 2 children. You don't get a meal for 300 these days, one meal, and you are given 300. And it is still going on. It is still there. It is still there. It's a different thing. In new regime, it is not applicable, but old regime, it is still there. And they have not removed the old regime. So had they gone for only new regime, at least 75 sections they could have done it. I don't know why they are continuing with the old regime. What for they are doing it? 70, all ATC to ATU would have gone. Many other sections would have gone. But it is still there. Why are you putting the burden on us? Remove this old regime. What is the need of an old regime now? Everybody is looking for new regime. But our Prime Minister had made everybody rich. That 7 lakh has now gone to 12 lakh. Every businessman is showing income of 12 lakh instead of 7 lakh. So, one go, we have our poverty line, poverty is gone. We are all rich now, we're getting 12 lakh rupees. Can you beat it? So, what kind of a thing is this? But still, they have a old regime, exemption 250. 255 lakh, what you call 5%, about 10 lakh, 20%, 5 lakh, about 20%. What is the need of this? What are you getting out of it? When people are shifting to the new regime, what was that? But it's still there. I don't know reason. I don't know. Our chairman must have gone there. They must have put a question there. Why are you continuing with the old regime? I don't know the answer to that. I was not the part of that committee to go there and discuss it there. But I went to CBDT to find out. He says, let the select committee decide what is to be done. Our job was to reproduce the same. Our job was to reproduce the same, not to make many changes. Only language to be simplified. Those sections which are not there to be removed, and give section allotment to each capital section. This is what they have done. This is what they have done. My point is, now parity start from power 29. Let's start from that. हमें तो 271, 278, 271A, double A, 271, 271, 271 AA, 271 AB. हमें तो वही आता था. 271A DA. They all are there. No parity change. But numbers have changed. No prosecution change. Numbers have changed. Are you getting my point? 332 to 354, you have charitable trust. It is a good, I'm telling you. You have put everything in one go. A 115B. Somewhere it is written 115 BBC, somewhere it is 1 BBJ, 115 TD, 115 TE, or then 164. All have been put under 332 to 33. To the great extent, it becomes easier. But let me tell you, sir, everyone who is listening to me will have to study. Difficult, but there is no other alternative. You will all have to work hard. Our Sanjay Agarwal, Central Council member, is also joined. Welcome, sir, Sanjay ji, International Committee. So, Chairman, International Committee is also there. But what I'm trying to tell you, that whatever I've done, I'm not against it. No, I'm not. But let me tell you, when we read this and we find loophole, capital A or capital B later on. Once it is settled, then the changes have to be made in a particular chapter, maybe business, maybe capital gain, maybe any other. There is no space, then you'll have to write 92A, 92B. They will bring that. This far I have given you a method. Now, maybe a few things I might have left. Task. A modern Aditi. Now you are on mute. You are on mute.
So we cannot.
You are on mute.
Yes, sir. Hello. So you finished?
Yeah.
Okay. So, sir, the session was really good. I mean, as a junior CA, if I talk about it, was so good. I mean, the sections you have in your mouth, like we will take years to learn these sections. It's really a privilege to learn the old income tax and the new. It's tremendously awesome. So listening to you. So today we have with us CA Sanjay Agrawal, sir. So let me introduce sir, and we welcome you in this webinar. Sir is practicing since 1986. I was not born even. So, sir is a Central Council member. He is the chairman of International Taxation Committee, and sir is the chairman of the committee of the aggregation of the CA firms. So, sir, we welcome you. Can we start the question answer session?
So, sir, let him make some comments on international taxation in the new bill. If he wants.
Yes.
Sanjay ji, good afternoon, you sir.
Yes, sir. We are most welcome. Yes.
Not able to get you. Some problem.
Welcome.
Something.
Good afternoon, sir. Most welcome, sir. Yeah, actually, sir, in my office there is some problem today about the bandwidth. So that is why I have taken myself in the off video. Aditi, are you getting me?
Yeah.
You continue.
Please.
Thank you, sir. You can take international also.
I have done my job. No, it is Aditi's job, not my job.
Sir, we want you, Sanjay sir, we want you to throw some light in this new bill regarding if we talk about international taxation, some points if you can throw upon on this latest bill.
Aditi, after Dr. Girish Ahuja, no one can speak, and especially in front of Guruji, I will not speak.
Macro view.
But and then network is also a problem. But I want to say that few of the things which we have done from the committee, we have also prepared the representation which we have given to the standing committee. A big volume we have given it. We have also been asked by the CBDT about the expected rules and forms which will come in the international tax in new income tax bill 2025. So we have given input on that also, which includes the present difficulties which members are having. So these are my small inputs. Rest you can continue any question answer if it is there.
So, so there are a few questions asked by the members. Let me start with the good questions or the relevant to this. His first question was from Mumbai, from Madhukar Munwale. He asked, old IT Act has been amended more than 500 times to accommodate SC and HC rulings. Will it simplify and merge these rulings as a part of a new act?
I am telling you, amendment over the years. Who brought the amendment over the years? These are the professionals who find loopholes in the law. They try to use it or misuse it, and then they plug the loop. There were old, earlier also there were 298 section, today also there are 298 section, but those A, B or proviso, there are 24 proviso in section 23C, which is not 24. Who brought these 24 proviso? It is we people who found out loopholes in the law, and they plug the loophole, then we find out the new thing, and they plug the loophole. This letter will go on. So whatever amendments are there, over the year, they find out that the people are misusing it, and then they do it, they amend it. And then in the light of the new situation, because this is digital economy now, everything has changed. They know much more than what we know about ourselves. The department has complete information about us. So they want us, don't do anything hanky-panky now. Gone are the days. These are the different days. They have the account for that, and they are capable of catching each and every person. So what I'm trying to explain, how this has happened over the years. 1961, over the years, so many changes. You said there was an amendment, but don't think the amendment will not come after this. Don't think that. We are capable enough to find out loophole in the law.
Yes,
Don't
correct.
think, but it will take little time to find out new things. It's not bad. And let me tell you, I'm not against. If there is something, you have the idea and you can plan out what are the consultants meant for. Remember,
Correct.
during Reliance time, 15 years Reliance did not pay a single penny tax because, and that's why 115 JB was introduced, minimum alternative tax. They took the advantage of the law. It was not that they were misusing it. They were trying to find out how tax planning they were doing it. They were putting out the more plants, getting benefits. So they did not pay. One man, Reliance, has brought minimum 120 section income tax act because of consultant, those who gave the idea. Now they brought the idea of buyback of share. Now suddenly why they have changed 115 QA? What has happened now? Because we knew that when I can go for buyback of share, I have to pay 20% plus 12% plus 4%. But if I give dividend, it is going to be 30% plus that. Why didn't they think that time that this can happen? Now why they have brought section 2 clause 22F to bring it that it will be a dividend? So professionals have minds, and we chartered accountants do apply our mind. And I have no objection in doing that. But point is, this is a cat and mouse story. Keep on doing it. But these days, the government also listens. Whenever we go to them and give our suggestions, I feel they do look into that and try to solve that problem. But today they have not solved that problem about 23rd July 2024, which I told them, and till now they have not issued any circular for that because they are literally afraid. What is this? This benefit will be given under 54 as per the old provision or new provision or not. So there are so many still issues which I am trying to tell you. But this is law. And if the law can be, if you have to follow the law in letter and spirit, then what is the need of Supreme Court or a High Court or a ICAI or a Commissioner of the need is that we try to find out how to do the planning and whether it is. I'm against wrong things. I'm against a tax evasion, but I have no harm in going for tax planning and at times tax avoidance also, if it is correct. So I'm very clear about it. Don't think the chartered accountant or these professionals or consultant, what are they meant for? If we are not able to advise them, then what are they meant for? We get money only for that, we advise them. And we try to get, I'm taking all reasonable, legal steps. No illegal hanky-panky thing. But legally, at certain places, I was allowed. So I was doing buyback of share. Now you have plugged the loophole, you have brought it there. We will find out the new way of doing it. But it's not wrong. It's not wrong. If I have to pay tax as it is, then what is the need? Tell everybody to pay tax. Then where is the need of a chartered accountant or anything? We do plan. We do. So that's why I'm telling you, it is going to happen. It's there. It's there. What are the question answer? It is there. One thing I've left.
So the next question.
112A is 1 minute. I forgot one thing to tell. 111A is now 196. 112 is 197. 112A is 198. 100BA is 199. BAA 200. BAB 202. BAC 203. BAD 204. BAE 200. These are all sections which have been there. It's not that same thing, no change. But they have been given new sections. So I'm telling my chartered accountant brothers and sisters, don't worry. We are capable of doing hard work. And we will definitely do whatever we can do the best for us. For all. Chili.
The next question was from Pune. The person name is Dhananjay. He asked, are ATM benefits continued in Income Tax Bill 2025?
Ma'am, I said no change in ATC to ATU. Only number has changed. What will happen later is a different issue. These days only number has changed. Some sections have been merged. That's all. 80TTA, TTB merged, or 80CCC is gone, 80C it has become. Otherwise, same idea. Same idea. Same idea.
So the next question is again from Pune.
Wherever I've gone, just by the way, I asked everybody, have you read the income tax bill? Nobody not even once stood and said, yes, I have read it. Or I've seen it. They have kept a copy in the, but they don't read it.
Guruji, this, our secretary, Priya Subramaniam, have read line by line.
Sir, so it is our job. And it is my job also. I've read it. Well, what to do? I've written the old book, I'm reading the new thing. That is the passion. She has been working so hard. I've been seeing her doing this for ages. 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 I'm not talking about
she's chartered accountant.
Please. She really works very hard. She really works very hard. I'm not denying that fact. But you have to. It is our job. I'm not saying that. But there are many things which she was also laughing away when I told few things which are there in that. So there's nothing to worry. We will read. We will do it. I said, why not Priya? We all do it. We will do it. We will work hard and definitely pick up everything from this.
So now the third question is again from Pune, from Mr. Santosh. He was asking, please throw light on sections 58(4) of the Income Tax Bill 2025.
Hey, he's testing my knowledge. 58 subsection 4. I'm microview I'm giving. Let me read line by line. Otherwise, ask Priya. She has read everything. I have not read everything. Please don't tell me that.
This is all from. So
read it. Read it.
No, he's asking 58(4) of the older law.
Okay.
No, sir, of the income tax, new income tax bill.
Can you tell me what is that 58(4)?
So that is why he's asking. So he must have find difficulty.
No, I have not gone details. I have given you macro view. I have to go for details.
Presumptive provisions.
Redundant provisions. She has got the book in front of her.
Yeah,
I don't have any paper. What can I do? I'm not in the habit of keeping any paper. So it is my test he's taking. Don't worry. Let the time come. I will tell every section and subsection. Wait a minute. After all, let it pass. Why should I read it at this moment? I have the other things to do. Let me complete the Finance Bill 2026 incorporation in the existing books, and then we will go. Kelly, next.
So the questions are almost done, because again, there people are asking this section and that. This will take a lot of time. So with this, we can.
Mr. Sanjay wants to say anything, please. Mr. Sanjay Agarwal, sir, you want to say anything?
Sir, actually, I have a bandwidth problem. No issue. Just I would like to say to the viewers, if you have any specific section-wise issue, please send it to dtc@icai.in. We'll see to it whether that requires any clarification or anything which is not there in the old act. So do write to us, we'll reply. And
so there
any
are some
specific question.
There are some errors in the act also. Some wrong section quoting is there. That is very normal thing, because they have quoted one section which is not there at all.
So Guruji, actually, we have done an extensive study, but today's session, as so far as I know it, it is an overview. So it is not yet a law, as you have already said. When it will be passed, there will be so many amendments. So right now, what we have done, we have given a compilation to the standing committee, which is a privileged one. But at the same time, I can say one thing, that your institute, your ICAI has done commendable job for giving the inputs, and we have worked very hard on it. And as said by Dr. Girish Ahuja also, that the office has also worked very hard. So once again, viewers, if you have any specific query, do write to us, and we'll take care in the DTC committee.
So there is one. Yeah, so there one good question came. So I just want to ask Girish sir. So there one person from Hyderabad is asking, in the new income tax bill, can CS and CWA people can sign financial statements?
No comment.
As of now, no.
Okay. So
No
so
in
what
no in new income tax bill.
Nothing is
In
going to
income,
happen. Let me tell
categorically,
you,
I am
it
saying
will remain the same. Just a rumor. I never wanted to say anything. It is a rumor. We are capable of doing it. We will do it.
So, sir, one takeaway from today's session, if you'll be telling to the viewers what we, being the young charters, what we should do. As you said, no one has read income tax bills. So what suggestion or what guidance you give us? What direction we should
Then
work upon?
when GST came, anybody knew it? Who has made GST successful in this country? Chartered accountants. They have really worked very hard. And GST is a very complicated private profit law. Every day notification comes. And thanks to our CP committee also and these programs, so many conducted by DTC or maybe indirect tax committee, maybe international committee, we are really educating our chartered accountants well. They have to attend these lectures, and it is difficult to study yourself because you have done so much in your work during CA days that you don't want to do that much hard work. Now it's better to listen to the programs which are conducted by not only on online but also physically by the branches, and they are doing a good job. Let me tell you, CP committee, or whatever the committee we have for programs, have done good job. Otherwise, long back we have. Now after this chat GPT, will anybody read it? I tell you, a chat GPT, artificial intelligence, we will be ruined. I'm telling you, at one day. Please start the habit of reading again. Don't look into the chat GPT and all that. This is your caliber, your skills will go waste if you are going to do that type of thing. They may say he's an old person, he doesn't know anything. These days it is cookie job, copa this and a shortcut work. There is no shortcut. There is no shortcut to success.
Sir, sorry to interrupt you, but our chat GPT for income tax is Dr. Girish. So what we
that
should
is
do?
a story, history. You want to know something, you want to pick up something, it's a different thing. But you should learn. History, though you refer to what you call books also. That is a different story. But you want everything to be prepared by the chat GPT appeal, and then you find out all things are wrong given there. So
that is why courts have come heavily, sir. Courts have come heavily on this chat GPT. They have passed the judgment in one case. They have said that because of the use of GPT, some of the people, some of the assessing officer have quoted wrong cases, and
yes.
that is a bad. So, while appreciating your idea that we have to read it, that is true, and I think Priya, we are having anything in pipeline for taking topic wise.
अभी नहीं होगा.
In income tax bill, sir?
Yes, income tax bill.
Yes, sir. Initial session was an overview, but we will hereafter be doing it the chapter wise sort of grouping certain chapters together and taking it as a topic.
Okay.
In fact, one of the queries which have come from the one person, one of the query has made a remark. It is more difficult to unlearn rather than to relearn. That was
everyone knows. Everyone knows. I
it?
told you in the beginning. I still remember what you call Companies Act 1956. 2013, I always take it to 56 first, and then I try to. So this has always happened. For ages you have been reading this act, and it becomes very difficult to unlearn it. Very, very difficult. But we can do it. We will do it. Don't worry. We will do it. We are known for our hard work. We all are known for our hard work, and they will do it. Don't worry. I've told everybody, don't bother. You will be able to cross the bridge when it comes to us. Am I right, sir?
Yes, sir.
Chairman,
Thank you, sir. Thanks for posing. But one comment I want to say that Guruji, that the consultant are not there only for the job that how to make the planning. The consultant are having one part of their duty. They have another part of the duty of a nation building to pay the appropriate taxes, and they should advise only appropriate taxes and not for the so-called understood in the eyes of the law as evasion.
Sir, gone are the days. We always advise pay your taxes properly.
Yes, sir.
You can go for planning because now it is a digitalization age. Don't think they know much more than what we know about ourselves. I've been telling everybody, gone are the days. But at
Yes,
the
sir.
same time, we have to apply our mind. And we have to apply our mind to the best interest of the client also, as well as for the nation also. Nation, we tell them to pay taxes. These people, I tell you, you can handle this situation. Dekhiye, if you don't do the planning, then what is the use of the chartered accountant? Then they will read and do it themselves. So what will be the difference between good chartered accountant and a bad chartered accountant? Or a person, new chartered and old chartered? He also knows. He says, this is the book we can read and tell you. No, sir. We have to read and interpret. And when the interpretation is there, they are likely to find out certain things which may interest our clients.
Okay, sir.
So can we close now?
Namrata ma'am, can we?
Yes, sir. Thank you so much, sir. Thank you very much for such an enlightening lecture and giving us an overview of the income tax bill. Thank you so much. Thank you so much, Sanjay sir, for joining.
Thank you, sir.
For balancing, Guruji.
Okay, sir. Okay.
So he
only
is
person
also
who can check me
thankful.
is Sanjay Agarwal. Otherwise, I don't surrender to everyone.
Not only thank you to him, but always that he is available. That is also important. And he has all right to scold us, to do anything for us. And this is something is the beauty for him that if you say anything, he is so bold and is so clear about the thoughts that he will place his view without fear and anything in the mind. So with this office, do the formal part of vote of thanks. Aditi, you wish to say anything?
So it's again a privilege listening the pioneers of our institute and the viewers who are listening. They must have got the knowledge. Looking forward to they'll be reading. They'll be reading the articles and the books with Sir Guide. Now also the Guruji. I'll be also studying what Guruji has posted. Even all young charters should study. We being again, we try to just see the clear text from the net, and we never listen. We never study. We never dig in. So again, after listening, sir, I also realized that we should study more and more so that we'll be becoming good consultants, good accountants. So thank you, sir, for your valuable time for overviewing the income tax bill. And Sanjay, sir, it's a privilege listening you. Priya ma'am, thank you so much. You were, I could see you were nodding on the acts which sir was telling because you were thorough with all the sections which sir has what sir was talking about. We are not aware of such sections, so it's a privilege that we all have to learn a lot. We have to read a lot. Then only a bit of knowledge we might get what sir has. So thank you everyone for joining this webinar and all the members who have attended this session. Thank you everyone.
Thank you. Have a good day. Thank you.
Thank you very much. Office may please close the proceeding.
Thank you.
Thank you so much.
Thank you so much.
Thank you, sir.